there's a lot of stimulus, and I think there's a chance that toward the end of the year, growth could be explosive. And if it is, then the Fed would have to reconsider how long it wants to keep rates so low. But at the moment, I think enjoy what's unfolding.
Of course, that was Ed Hyman from yesterday. I noted those comments, Bob, because he has had a very good track record in terms of accurately forecasting, broadly speaking, the economy. He also had positive things to say, as you might imagine, about his view of the equity markets in 2021, again, largely because of the Fed and as well the federal government in terms of spending and the vaccine. Just all these things that they will be stimulative, Bob. And so you got that going into 2021, at least. Ed Hyman saying we're going to keep going.
Yeah, Ed Hyman's terrific, and I completely agree with him. So, again, go back to the fundamentals. What moves stocks? Number one, dividends, dividend growth. Number two, earnings and earnings growth. Number three, the market multiple, which is a sort of a measure of exuberance. How optimistic are people about the future? And number four, which is what Ed is getting at, is liquidity. Liquidity is a very simple point. How much money is there out there to buy stuff? In this case, how much money is there to buy stocks? And as Ed has noted, there is an ocean of liquidity. Remember, the Federal Reserve started out this year with a $4 trillion balance sheet. They've added $3.5 trillion. They're north of $7 trillion on their balance sheet, and they're going to keep going. You know, $120 billion a month. That's another $1.5 billion, $1.5 trillion that you're dealing with throughout the year. So just think about this. The Fed's going to have a $9 trillion balance sheet potentially in a year. A lot of that money finds its way into the stock market. So on the margins, does it matter? Oh, heck yes. And just call your friends, David, like I've been doing all year, and say, if the Fed hadn't intervened in the way they did in March with the oceans of liquidity and all those programs, would the markets be lower? And everybody says, oh, yeah, and I get 20% lower, 30% lower, 40% lower. Nobody knows, but everyone says, oh, yeah, it would have been lower. So, yes, at the margins, I think the Fed was the biggest influence on the market, as well as hope for a smooth rollout of a vaccine.
Yeah, record highs for the market. Also, what it's meant for buoying the housing market as well. And unfortunately, we do have these debates. We've been having them even more increasingly this year on what it means to the income equality conversation as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.